The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. My name is Andrea Salasinos, and I would like to welcome you all to today's webinar titled Introduction to Support and Resistance. I'm very excited today because we are broadcasting our webinar in two languages, English and Farsi, simultaneously at the same time. And that's very nice. And the second reason is that we have a lot of registrations. Actually, we have more than 2,500 registrations, thanks to you guys. So let's get started. Let's go through the agenda for today. A lot of people ask me how to identify a top and a bottom. And this is what we're going to do today. We're going to define tops and bottoms. And similarly, we're going to define support and resistance. You are going to see a very nice slide about the psychology behind support and resistance. And you will realize how traders think. And then we're going to take a moment to see how support and resistance change roles. And then we're going to take a look at the support and resistance in a range. And of course, we cannot avoid discussing the significance of support and resistance. And then a very popular subject, channels, price channels, if you like, and how to construct a channel. I will show you in every detail how to do it. And of course, I will show you how people trade the channels. Don't forget that anytime, at any point, you can post your questions, and if I need any translation, my colleagues here will translate your questions for me, and I will try to answer your questions as soon as possible. So just type yes if you can hear me. Type yes if you can see my screen. So yes, so my colleagues will let me know if everything is okay. Let's receive some feedback from you guys so we know that from a technical point of view we are okay. Okay, very good. Guys, stop sending messages. We are receiving a lot of messages. Thank you so much. Okay, so what is a top? This is the question. What is a top? So I will give you a lot of definitions here, and then I will explain each and every definition with an image. So a top is a lower high. It's a lower high and a lower low. It's either a lower high or a lower high and lower low. Third definition is lower close. Fourth definition is lower high and lower close. Fifth definition is higher high and lower high. And the sixth definition is fractal. Up fractal, if you prefer. Now, let's go and explain each and every definition of a top. So lower high looks like that. Look at that. You see, this high is lower than the previous high. So here it's a top. We have a top because this is lower high compared to the previous one. Second definition, lower high and lower low. So in this definition, it's not enough to a lower high. We also require that we have a lower low. That's why we say lower high and lower low. And if that condition is in place, then the top is right here. We go on. Third definition is lower close. So we don't really care about the high and the low. What we care is about the close of the candlestick. Why the close? Because a lot of traders, including the father of technical analysis, Mr. Charles Dow, yes, they consider the closing price the most important price. So as you can see, this high price here may be a top right here. Excellent. Let's go on. And another definition is lower high and lower close. So again, we have this high, which is lower than the previous one, but we don't really care about the lows. What we care is that the close is lower than the previous close. So once more, this high here will be our top. Next definition, higher high and lower high. As you see here, we need 3 candlesticks. So the middle one is higher than the one to the left and is higher than the one to the right. As simple as that. And of course, this high in the middle will be our top. And another definition, the last one for the tops, is the up fractal. Yeah, it looks like that. Let me just show you. So we need 5 candlesticks. I don't know if you can see my hand. Can you see my hand? Can you see my hand? Can you see my hand? Yes? Okay. So this one, the middle finger or the middle candlestick is higher than the 2 candlesticks to the left and is higher at the same time it's higher than the 2 candlesticks to the right. As simple as that. Okay, guys? So we have our fingers. The middle one is higher than the 2 to the left and higher than 2 to the right. Very nice. And of course, the middle high is going to be our top. So why we need to be able to identify correctly a top? Because we need tops for many different reasons. One of the reasons is to identify a resistance. So resistance is actually a top. Another resistance here, it's another top. And another top here is another resistance, right? So you see, it's very easy to identify a top, and similarly, you will be able to identify a resistance. Which definition of a top you are going to apply is strictly up to you. I just gave you 6 definitions. Okay, guys. So if you don't have any questions, we move on. We go and wrap up here that when we talk about resistance, we talk about tops. And of course, I know that some of you have an economics background. So in economics terms, a resistance means supply is more than demand. Very good. We go on. What is a bottom now? 6 more definitions here. It's a higher high,
I thought it was in front.
higher close, lower low, lower high, pardon me, lower low, higher low, yes, and higher high, higher low, and higher high, and higher close. All right, let me see, and we have fractal, which is, in this case, is a down fractal. We have a question here. The question is, can the fractal candle be a doji? So if our friend here means the middle candlestick, yes, the answer is yes. The candlesticks in a fractal can be of any shape, size, and color. Another definition from our friend Hani: is there definitions more reliable than others? Yeah. Are there more reliable definitions for tops and bottoms? So the answer is yes and yes. And the more complex is the definition, the more reliable it is. Sometimes. Sometimes a simple definition will do the job. But as a rule of thumb, your candlesticks should not be very small. Because when you have very small candlesticks, it means that most probably you are in a range. Yeah. Okay, very good. Let's go on. What is the bottom? Higher high. So you see that for this definition, what we care is that this high is higher than the previous one. And if this condition is met, is there, then the low is going to be the bottom. Second definition is higher high and higher low. So you see, it's not only enough to have a higher high, but we also need to have a higher low. So you see that this definition is more complex compared to the previous one. It has 2 conditions in it. Let's go on. Third definition is higher close. So we don't really care about the low here, as long as the close is above the previous close, then we are in business, and this low here is going to be our bottom. Again, we concentrate on the closing price because a lot of traders believe that this is the most important price. Another definition is higher high and higher close. So it's not enough to have a higher close compared to the previous candlestick. You also need to have a higher high. And the next one is lower low and higher low. Here we need 3 candlesticks. And the middle one is lower than the one to the left and lower than the one to the right. Easy one. But now you see that we made it a little bit more complex because we included 3 candlesticks except of 2. And down fractal is the last definition. So you see here that we have 1, 2, 3, 4, 5 candlesticks. Excuse me. And as long as the middle candlestick is lower than the 2 to the left and lower than 2 to the right, then you have a down fractal. Okay, sorry about that. And now we have another question. Do high shadows candles can be seen of one resistance level? Yes, shadows are included. Shadows are included. The question is, should we include the shadows of the candlesticks? The answer is always. Always. Very good. Let's go on. What is support? Obviously, support is the same as a bottom. And then this is another bottom, any definition you want to apply, and of course it's also a support. And this is another bottom here, and similarly it's another support. It's another support, this one here. Excellent. Let's go on. And support actually it's a bottom, and in economic terms is demand is more than supply. Yeah. Okay. So let's go on. And I like this slide, guys, because it explains the psychology behind support and resistance. Let's go and see how traders behave in this case. Look at that. Prices go up. Why? How we know that prices go up? Because we see the bullish candlesticks, right? How do the traders feel when they see this price movement? And then they see these bearish candlesticks coming in. So now the bears feel that the market will fall lower. So what do? They sell. They open sell positions. We have a question. What is the time frame you are working on? Okay. This is a very nice question from our friend Hamad. So Hamad, anything we talk in our webinars, anything related to technical analysis applies to all time frames. And this is the beauty, of course, of technical analysis. So, as I was saying, when the market goes down, the bears believe that this downtrend will continue, so they open short positions, they sell. But then we see that there is a bullish candlestick, and you now know that this is a bottom, which is actually a support. And of course now the bulls believe that the market hit a bottom, it found the bottom, and they buy because they believe that the market will go higher. And the market is so nice to the bulls and is going higher and higher. And what do the bulls do? They start smiling and they start dreaming what are they going to do with their potential profits, right? And of course, the market goes even higher, and our friends, the bears, don't like what they see, and they wish that the market comes back so they can get out. Okay, let me repeat myself. When the market goes up, it means that the bears are losing money. So they wish that the market drops back at the support so they can get out. Now the bulls regret for not buying more. So they wish that the market goes back so they can open more positions. And the market is going higher. And then there are traders who just turn on their laptop, they see their chart, and they say, we missed the party. And they wish that the market falls back to the support area so they can enter with a buy position. So what I'm trying to say is that all three traders, the bulls, the bears, and those who don't have a position, wish the same thing to happen, for the market to drop back to the support area. And of course, their wish is granted. Their wish is granted, and the market falls back to the support area. Now, what happens here? The bears that shorted, that sold in the beginning, they want to get out, and what should they do? They should buy to break even. So the bears buy. The bulls buy so they can increase their volume. And then you have those people who didn't have a position, and they buy as well. So what happens when the market hits this support level? The prices bounce up. Yeah. Okay, guys, so this is the psychology behind support. We have another question by our friend Francisco Carlos about volatility. I don't understand the question. Francisco Carlos, please can you rephrase your question? The question has to do about volatility and about statistics and analysis. Please rephrase your question. Another question here by our friend Hossein. how can we detect the most important support and resistance level? How can we detect the most important support and resistance level? So, Mr. Hossein, I have a slide especially for you, and I'm going to explain that question for you. All right. If we don't have any other questions, then we move on. All right. Okay. So we move on, and now let's take a look at the psychology behind the resistance level. Just to remind you that resistance is a top, right? Remember, resistance is a top. So prices go up, and then we see few bearish candlesticks, and now they are moving higher again. So remember that the market never moves in a straight line. And the market is moving higher and higher. And some traders are very happy. And then they analyze the chart to find out, to identify their next position. And then, of course, we see a top right here, a resistance. And actually, the definition of resistance in economics terms is that supply is more than demand. Supply is more than demand. All right. We go on, and now the bulls buy in a strong uptrend. During the uptrend, the bulls buy. The bears go short because of this resistance here. And the bears, of course, are very happy now because they make profit. And then, of course, at this point, the bulls realize that most probably their decision to buy was wrong. Their decision to buy was wrong. And they wish that the market returns back to the resistance so they can get out. The bears regret for shorting only just a small volume, and they wish for the market to go up at the resistance so they can sell more. And then, of course, we have our friends who just turn on their laptop and they realize that they missed the party, and they wish that the market goes back to the resistance so they can open a sell position. Their wish is granted, and when the market goes back to the resistance, what happens? Bears sell more. Bulls sell so they can get out of the market. And those who didn't have a position, they sell. Yeah. So you see, all three types of traders sell at the resistance level. And what is the result? Prices fall. Prices fall. Okay, guys. Do we have any questions here? No. So we can move on. Resistance and support in uptrend. Oh, let's see here. We have a question. It's a long question, guys. Let me see. From Amy or Ami Hossein. When the price reach support level, is the pressure of buy that diverse the market or closing selling positions of investor higher the price. I think, yes, this is what I said. If I understand the question well, Hossein, this is exactly what I said, right? Yes. I think we agree. Unless you mean something else, so please rephrase the question. We have another question. What is the best time frame to find support and resistance level? Once more, all time frames will display support and resistance. All time frames. So let's take a look at resistance and support in an uptrend. What do you see here? What do you see? It's a top. And of course, it's a resistance. Guys, this is very important to understand. During a strong uptrend, resistance will be violated. During a strong uptrend, resistance will be violated, will be breached, will be broken. It's extremely important to understand that. Because a lot of traders believe that when the price hits the resistance, that the price will rebound and fall down. This is true sometimes, but not all the time. So now what do you have here? You have another top, it's another resistance. And if this uptrend is strong, this resistance will be broken. And what do you have here? You have another resistance. And this resistance will be broken again if we have a strong uptrend. And this is the definition of an uptrend, actually, right? So once more, it's extremely important to understand that during an uptrend, a strong uptrend, resistance will be broken, one after the other. Yeah. We have another question now by our friend Korush. In one trend, there are several supports and resistance. Which ones are important? So there are a lot of support and resistance levels, and of course we have to be able to identify the important tops and bottoms. One rule is to avoid the tiny candlesticks. One rule is to avoid the very small candlesticks. This will help you to identify the important ones. Of course, if you have an uptrend, then you look for higher tops and higher bottoms. And we have another question by our friend Ali. Why sometimes the support levels break? As I said before, support and resistance break all the time. It's not strange, it's very common actually. Yes, excellent. Let me go on. And let's take a look at the resistance and support in downtrend. So this is a bottom. And of course, bottom is a support. And if this price movement is a downtrend, then most probably prices will break through this support. And now they form another support here. Prices bounce up to form a correction. And then if we have a nice downtrend, a strong downtrend, prices will break through this new support level as well. And this is how price moves during a strong downtrend. Once again, in a strong downtrend, support levels will be violated, will be breached, will be broken most of the time. Let's go on, since we don't have any questions. Resistance becomes support. So this is very interesting because support and resistance change roles. They change roles. So you see here, let me backtrack them one more time. Yeah, you see resistance because this is a top and this is support because this is a bottom. Beginners usually confuse very easily the concept of support and resistance. The rule that you have to apply so you can differentiate between support and resistance is the following. You find the current price. Anything above the current price is support, is resistance. Anything above the current price is resistance, and anything below the current price is support. So this one is a resistance. Let's see what happens. As I said, most of the time resistance will be broken, and this is the current price. Now this line here is not resistance anymore, but now it has changed to support. Because anything below my current price is support. Okay? So let's see what happens. Now we have a top. This top is a resistance. Why? Because anything above my current price is a resistance, and anything below my current price is support. Very good. And then prices break through again this resistance. They form another top, another resistance. They find support at the previous level, and the story goes on and on. So we have a question here, maybe I think two, by our good friend Peter. Is there any visual indication that can tell whether there is a high probability that the coming uptrend will break through a resistance level? And okay, so this is the question. How can you tell if there is high probability that the coming uptrend will break through the resistance level? So the answer is very simple. If you have an uptrend, based on the theory of the father of technical analysis, Mr. Charles Dow, the uptrend is most likely to continue than to reverse. Yes. So, if you find yourself in an uptrend, then most probably the resistance will be broken. Very good. And of course, similarly, if you find yourself in a downtrend, most probably the support will be broken. Next question by Tejiri. I don't know if I pronounce it correctly, Tejiri or Tehiri. Yeah. How can you identify that the trend will continue? An uptrend is most likely to continue in the same direction, and a downtrend is most likely to continue in the same direction. And this brings me to my favorite subject of range. Where in a range there is equal probability that the price will break either up or down. Okay, let's go on. So support becomes resistance in a downtrend. So this is support. And then prices go a little bit higher for a correction. They form a top, a resistance. But since we have a strong downtrend, prices break below the support. And this support becomes a resistance now. And of course, prices break again through the support. And now this last support becomes resistance. So the important thing to remember again is that during a downtrend, support will be most probably breached, broken, violated. So if we don't have any questions, we go on. And we're going to see something very, very interesting here. So guys, if you see, please stay focused because it's very important here. Do you see these successively higher tops, successively higher resistance? And can you see also that each resistance is broken on the way up? But even though the uptrend is most likely to continue to move higher and higher, that is not going to happen indefinitely. There will come a point that the market will reverse. And this is the case where we discuss here. You see here we have a top, a resistance. They form a bottom here, or a support if you like. So since we have a strong uptrend, we expect prices to break through our last resistance. But this will not happen this time. Because in trading the financial markets, nothing is 100%. So now prices find a resistance here. They cannot break through. And not only they cannot break through above the resistance, prices move lower and break through the last support. Now, what you see in place is a beautiful reversal, which is called double top. And a lot of technical analysts are going to open sell positions at this point right here. Why? Because this is the beginning of a new downtrend, and that downtrend is most likely to continue to fall lower and lower until they find somewhere a strong support to stop. Excellent. So let me see, I have a question here from Mohammed. Which indicators we can find peak and the low levels? So actually our friend Mohammed says, is there any indicator that will identify the tops and the bottoms? Yes, I know of one indicator. Actually, it's a custom indicator, but your job as technical analyst is to identify visually the tops and bottoms. This is the best way to identify visually the tops and the bottoms. Okay? And I will have another question here by Mohsen. Mohsen says, to identify support, can we use cross spots of Fibonacci? Can we use Fibonacci? The answer is no. The answer is no. We identify tops and bottoms only through visual analysis, applying any of the definitions that I explain, or you can make up a new definition that you prefer. So the answer, no. You cannot use Fibonacci. I know that some traders use Fibonacci to identify support and resistance, but you cannot rely on the Fibonacci only. You need other tools as well. And the most important tool to use in technical analysis is price. That's why we use price to identify tops and bottoms. Anything else other than price is secondary to price. Yes, and it's very important to understand that. Price is the boss. Very good. Okay, guys. Let's go on. Okay, let's see another reversal. Now we have a beautiful downtrend. We have a nice support level here. And prices bounce up to form a correction. And we expect prices to come lower than the support, so the downtrend continues. But this time it will not go lower. And not only prices will not go lower, they will bounce up and they will break above the last resistance. And this is very nice for technical traders because now we identify a beautiful reversal. And a lot of technical traders will buy here. Very good. So let's take a look at the range. So the definition of range is equal tops and equal bottoms. Actually, everybody says that range is equal tops and equal bottoms. But please allow me to disagree. This is not true. This is not true. Equal tops and equal bottoms is not true. It's about more or less equal tops and about more or less equal bottoms. And since the tops are not equals, and since the bottoms are not equal, it makes the range very difficult and risky to trade. One more time, range is extremely risky to trade because, contrary to popular belief, the tops are not exactly the same and top and bottoms are not exactly the same. So perhaps it's better to say that in a range, prices fluctuate within a band of support and resistance. And of course, now we come to the question of our friend who asked before how to identify the significant support and resistance. So the rule here is that the more time prices trade at the support and resistance level, the more significant it is. So how many times the price touched on this line? 1 or 101 times? You understand what I mean? Yeah. And then how recently prices touched this support or resistance? Prices touch support or resistance today, 1 hour ago, last 2 days, or 1 year ago. It makes a huge difference. Is it today, yesterday, 5 minutes ago, or 1 year ago? So the more recent activity, the more significant the support and resistance is. Now we have a question by our friend Naim. Naim says, if the price violates the support or resistance area, when will be the best time to enter the trade? If the price violates support or resistance. If the price violates support or resistance, when will be the best time to enter the trade? If it's an uptrend, then when the price goes just above the resistance, you go with it. If you have a downtrend, then when price falls below the support, you go with the downtrend. And the next question is how to mark a support in an uptrend and a resistance in a downtrend. How to identify, how to mark a support in an uptrend and a resistance in a downtrend. So this is what we explained in the beginning. Support is a bottom, resistance is a top. Very good. Let's go on. Uptrend lines. This is very interesting. So prices are going higher and higher. And I know that a lot of traders like to draw lines on their price chart. So since we have an uptrend, the only line that you can draw is the uptrend line. So how do you draw an uptrend line? You need at least 2 points to join to draw a straight line. So from this point, you can go to this point or to this point here. So I chose this bottom and this bottom here to draw my uptrend line. But never forget that you need at least 2 bottoms, 2 points. And another note, very important note here, is that you have to include the shadows as well. Shadows represent prices. Shadows represent prices. Shadows are there because they were rejected by the market. They were rejected by the market, and they hide a lot of psychology behind them. So why are we discussing the uptrend line? Because the uptrend line serves as a support area. So you see prices find support on the uptrend line and they bounce up. They come down, they find support and they bounce up. They come down, find support and they bounce up. Similarly, downtrend lines are drawn by joining 2 or more tops. And I hope it's obvious that you have to include the shadows of the candlesticks as well. And we need at least 2. Never forget that. Now, this brings us to a very interesting topic, the channels. So channels, let me just explain the anatomy, if you like, of the price channels. So a channel is like a range, but it's diagonal. It's diagonal. It's not really horizontal, right? So in this case, we have an uptrend channel, and the lower line, which is the uptrend line, has a specific name and is called the basic trend line. And the upper line is called channel line or a return line. So the theory is that prices are trapped between these 2 horizontal lines. So this is the concept of channels. How do you trade the channels, right? Or how you construct them? How do you construct them? Let's take a look. To construct the channel, you need a minimum of 3 points. So you need at least two bottoms, bottom number 1 and bottom number 3. Since you have two bottoms, it means you have 2 points. It means that you can draw a straight line. And then you draw a parallel line through top number 2. And then when the new top arrives, now you can adjust your upper line to pass through 2 and 4. Excellent. So uptrend channel, this is what we just discussed here. What you have to remember is that you need 1, 2, and 3. Let's go on and let's draw the downtrend channel. Now, once more, we need 3 points, 2 tops. 2 tops, we connect the 2 points, we draw the straight line, and then we take this parallel line through point number 2, and then when the bottom number 4 is in place, you can connect 2 and 4, so you can form a straight line which will be adjusted. Okay, we know that, and let's go on, but this time the upper line, the downtrend line, is called basic trend line, and the lower line is called channel line or return line. Now, how do you trade the channel? This is what we need. So we have one bottom, we have a second bottom, we connect these 2 points, and we have the basic trend line. So since we identify that, we see that prices bounce up and we buy. Prices touch the upper line, the return or channel line. And what do you do here? You close your position so you can take your profit. And based on the theory of trend channel, prices are expected to fall lower and find support at the basic trend line. And of course, what do? You buy again. This is the theory of the channel. Let me show you the aggressive trading now. So here we have 2 bottoms, 2 points, we connect them and we form a straight line. Since prices found support here, we know that they are expected to go higher, so we buy. Prices go in our direction and hit the upper channel. So what do? I close my long position, and also I am very aggressive, I sell as well, I go short, because I expect the price to go lower. And indeed, prices fall lower and find support at the uptrend line. So I close my short position here, I take my profit, and I also buy. This is aggressive. Why is aggressive? Because here I sell during an uptrend, and that is risky. It's risky to sell during an uptrend. Okay, let's go on. And Before we go here, actually, I have a couple of questions. When price breaks through the support resistance and I want to go long or short, where can I place the stop loss? This is Peter. Question by Peter. So there are a couple of ways to do it. The first one is when, let's say you buy. So when you buy, it means that you buy at the support. So you place your stop loss just below your support area. So the second way, for example, let's say that you buy when you identify a chart pattern reversal at the support area. So there you have to place your stop loss at the technical bottom, at the bottom of the chart pattern. And if you, for example, follow Japanese candlesticks and you buy at the support area when you identify a hammer, then the stop loss will be at the low of the hammer. So there are different ways to place your stop loss. I hope I gave you an insight on that, Peter. Otherwise, please pose another question and I will be happy to try to answer it again. And we have another question here. I learned that the ADX is an indicator. It's called Average Directional Movement Index. Is used to identify a trend. Is it true? Okay. Actually, ADX is out of the scope of today's webinar. But ADX is used to identify whether the market or the specific currency pair, if you like, is ranging or not. So, for example, it consists of three lines. It was developed by Wells Wilder. Very good. Is the same scientist who developed RSI, by the way, and many other popular indicators. And he suggested that when the ADX line, the blue line on your MT4, if it goes above the 20 or 25 line, then it means that there is a trend. Now, so far, up to now, just because the ADX goes above the 20 or 25 line, we just know that there is a trend. The timing to enter this trend, it lies in the crossing of the two other lines, the blue, the green and the red. The green and the red. The green line is called the plus directional index, plus sign directional index. Plus DI, and the red line is called minus DI. So they behave like two moving averages, if you like. They behave like two moving averages. So when the green line crosses above the red line, then it's a buy signal. And when the red line crosses above the green line, then it's a sell signal. Of course, the buy and the sell signals are in place, provided, strictly provided, that ADX is above 20 or 25. So just to give you a preview on that, we are going to have soon a webinar on ADX, and I will explain more on that. I hope this helps a little bit. All right. So let's go on, and let's take a look at this channel here, guys. At some point in time, prices will break above or below this channel. And when they break, like in this case, we need to know how far higher prices will reach. And of course, technical analysis provides a tool for that. We will never know exactly where prices will go, but based on the theory of the minimum price target, we can take this distance between the upper and the lower channel and project it at the breakout point. This is the minimum price target. So most probably prices will move even higher. Move even higher. But if they break lower, like in this case, before that, I want you to take a look that this top failed to go and touch the upper channel. So this is a warning that the top, this price, never touched the upper channel. It's a big warning. And then price falls below the last bottom or below the uptrend line. And if you take a look at it, it's actually a beautiful reversal. It's a double top, right? It's a double top. It's a reversal. So most probably prices will go much lower. How much lower? How much lower? Well, you can take the distance of the channel and project it at the breakout point. So in a downtrend channel, we sell when prices hit the basic trend line, and we take our profit when prices touch the lower channel line. So we sell here, and we take our profit when prices touch the lower channel line. But of course, we have the aggressive traders. So what do? They sell at the upper channel. That is fine. They expect prices to touch the lower channel. Prices do find support here. So our aggressive friends close their sell position, but now they become very aggressive and they want to buy, and they place a buy position. It's very risky actually, because you buy when the price is falling. That's why it's risky. And of course, if prices find resistance at the upper line, they close their buy position, and at the same time they place sell position because they expect prices to fall lower. One more time, this is aggressive trading. And price target during a trend channel, a downtrend channel. So again, this downtrend channel will continue lower and lower. Prices will be trapped between the two lines, but that will not continue forever. It will not continue forever. And at some point in time, prices will fall lower. And we apply our minimum price target theory. We draw a line to find out the distance between the two lines, and then we project that line at the breakout point, and this is the minimum price target. Most probably prices will fall even lower. That's why it's called minimum target. Okay, and what do we have here? Now, of course, prices fail to touch the lower channel line. It's a warning, of course, but nothing else. And then we wait, and what we see is that prices break above the upper channel line. And of course, this is a beautiful reversal. It looks like a nice double bottom, right? And technical analysts will place a buy position here. So guys, this is what I had for you today. I hope you enjoyed it. If you don't have any other questions, if you have, please post them now. Otherwise, I would like to say thank you for attending this webinar. And I hope you enjoyed it. I hope you learned something new. And I hope I see you next time. But before I let you go, I have a question or two here. 3 questions maybe. Let me see this one. What is so the question is, what is the probability that the price will reach the bottom and top of the channel? What is the probability? Okay, during a downtrend, let me just go find the downtrend for you guys. I don't know if I can do it easily like that. Just give me a second. Yeah. Okay, very nice here. Look at that. So, during a downtrend channel, it's most likely that prices will come lower and touch the lower channel line. And during an uptrend channel, let me find one here. prices are likely to go and touch the upper line.
The other
Question is, are these two lines parallel? The answer is yes. Yes. Yes, because actually a lot of traders use a tool called regression line that automatically draws the upper and the lower channels, and by default they are parallel. Okay, now we have a nice question by our friend Abbas. Until when the trend can continue? Okay, maybe Abbas attended one of my seminars, and I always say that the trend will continue forever until it reverses, right? So this is the answer. It will continue forever until there is a reversal. And then we have another question by Emeka. Emeka, can channel be constructed singularly line by line? Most channel indicators pick double lines to place on the price. Which channel? I don't know. I don't know what our friend Emeka means here, please. So Emeka, I don't understand the question. What do you mean line by line? I don't understand. So Naim, our friend Naim says, do all currencies react the same to support and resistance? So once more, all these technical tools that I'm explaining apply to all currencies, all financial instruments. But of course, you have to keep in mind that some currencies have different character than others. Yes? So you have to experiment with the currency of your preference and see how they behave exactly. Can we? Another question by Kazim. And can we trade only using support and resistance only without any indicators? You can trade without indicators. You can trade without oscillators, but you have to use some chart patterns or candlestick patterns along with the support and the resistance. Okay? Support and resistance is not enough. You need Japanese candlestick patterns or chart patterns. So another question, the last question is by our friend Michael Ekeze. How do you place take profit and stop loss on channels? So if you buy here, for example, then you can place your stop loss below this bottom here, this support, this bottom, and take your profit when price touches the upper channel. This is one way. This is the theory of channels. But of course, you can modify and use, for example, a distance traveled by your candlestick where you entered. So, for example, you don't have to close everything here. You can close when when the price traveled, for example, 100%, 200%, or 300%, or it touched the upper channel. There are different ways to take profit. And of course, another way to take profit is when you see a reversal in the opposite direction.
Long time ago. But I told
Okay,
him.
guys,
Never.
thank you so much.
I'm gonna check.
I hope you enjoyed it as much as I did. And please keep on checking your email, because my colleagues will send you soon another email inviting you to our next webinar sometime very soon. Thank you and see you next time.